I'm here with Professor Merton. Professor Merton, good to have you here with us. You write a lot about risk. Mario Draghi of the ECB now, he was a student of yours. What do you think in terms of how the Europeans are managing risk in the various countries right now?
I should tell you, my expertise is not in European sovereign debt, but of course, how could you not be watching what's going on? And I think it's pretty fair to say that the issues here are as much or more political than they are economic. They have great economic implications, but the decisions that have to be made vis-a-vis whether, most importantly, whether the ECB is going to take a role similar to the one of the Fed, Bank of England again, and others, where it really becomes a kind of lender of last resort or is willing to support the bonds throughout the Euroland. And until that decision becomes clear, and I don't know how it's going to do it, I think the rest are probably kind of second order. I mean, we're seeing the dynamics of what can happen. We've seen Spain today, Italy,
it just
yesterday.
Continues to grow.
We have change of the prime minister. That looks very good. I think the people in place look to me as good as you're going to have.
Right.
But the markets don't seem to be satisfied.
We are at a time when we're kind of looking at risk all around the globe, and whether it's Europe, the risks here in the United States. I mean, I think there are some out there who continue to question whether or not the hedge funds that are out there are safe. Are they managing their risk well enough? I bring it up, you know the background. You and I were talking. You co-founded Long-Term Capital Management, or one of the co-founders. What do you think about the risk within the hedge fund community right now?
I think we have to step back and say that during this whole crisis, the hedge funds have not been a direct contributor to the risks. That doesn't mean they couldn't be in the future, but in the past, it was in the credit markets. It involved really very generic things: money markets, credit markets. I think the change in financing for the hedge funds has brings into question whether they can perform the functions they did in the past. I mean, we always think about hedge funds as places where you can try to make high returns and take big risks. But it is also, if you look at the role of hedge funds in the financial system, I see them as intermediaries to intermediaries. In other words, if you're a bank, you have a set of rules you have to follow. If you're an insurance company, you have a set of rules you have to follow. At any point in time on any day, some of these rules have unintended consequences, not intended as public policy, that create costs on the banks, the insurance companies, and so forth. In order to alleviate those costs, you need a counterparty to trade with on the other side who doesn't have the same problem. A bank can't help a bank because they have the same problem. Hedge funds, by being lightly regulated, are in a position to perform that role. Now, to the extent that their financing has changed, they're probably less likely to be able to perform the role as well. That may be one of the reasons that we had strange events like the swap curve going negative, the swap spread going negative. But in terms of latent risks that are there, we have to be vigilant because we still do not have in place what I think is a very important element, which is,
No, go ahead.
No.
I got a few seconds.
OFR, the Office of Financial Research, of which we have the aggregate positions and know what the exposures are. So we really don't know where the hedge funds are now, but that's not unique to them.
Okay, that's interesting. I know there was so much we wanted to talk with you. We're going to have to get you back and get you some more time. Professor Robert Merton.